I didn't cue up any music. Absolutely my bad. Even though you can't hear the music very well. Can you hear me, by the way, Eric?
I can hear you well, yes.
Okay, excellent. Audience folks, someone give me a thumbs up if you can hear me, please. Anybody? A thumb in the audience? Please. Shoot. Oh, yeah, Dennis. Dennis says he hears me. Awesome. Great. All right, Joyce. Yes, all the folks. Yeah, everybody's here. Okay, excellent. It's just the delay. Okay. Hopefully this bug on X will work itself out, and I'll be able to launch and host again, and everyone will be able to hear me. There is a lot to get through, only because I was slacking on the job for the last couple of days. I'm sorry to everybody. So we're going to review a bit. And the jobs report is going to come out while we're on the air at 8:30. The reason I don't have the jobs report in the title is not because I don't care about it. I think that um, nobody knows anything about what this Fed is going to do. I mean, it's great because there's an endless amount of journalism and editorials on what the Fed is going to do next. But we oscillate between um, almost definite rate hikes to 50% chance of a rate hike, depending on less jobs being created, unemployment going up, inflation potentially coming down. I really think, and then, there's also rumors. There was a widely circulated story yesterday that Warsh is considering a rate hike for September. I think that was flamed by the fact that Lisa Cook and Neil Kashkari, who are both incredibly hawkish members of the Fed, they both laid out cases this week why the central bank should raise borrowing costs to tamp down inflation. My own my own opinion on this, not that it matters all that much. My own opinion is that the market is doing a lot of the heavy lifting for the Fed. I don't know how important the Fed really is at this point, whether it raises or cuts. I think the market itself is doing a pretty heavy duty job on keeping rates pretty high, certainly relative to recent history. And so, really, does the Fed funds rate matter all that much? I guess it does to those folks that like to make news, but I don't know if it makes that much of a difference to the market if the actual 2 year, 10 year, 30 year are outpacing wherever the Fed is. In addition, we are just ticking upward on our federal debt. Um, and we're now at 39.3 trillion. I'm sure that 40 trillion will be a really exciting day, and it's not going to be far into the future. Like, we'll probably tick that easily inside of, oh, before the end of 2027 for sure, maybe before that. So get your hats ready for 40 trillion. So I don't know how much of a difference the Fed is going to make. So, but we'll go ahead and go through the jobs report at 8:30 and whatever comes along with it. There is a bunch of company specific news and earnings. As I've said, we're at the point in earnings season where we get a lot of consumer facing companies, retail, and so forth. Um, and along with that, we have everything going on with respect to vegetable illness outbreaks. So we had one relating to lettuce, cyclosporus, and then we now have one relating to jalapeno peppers. At the same time, Sweet Green came out with earnings. Stock is down about 16% pre market. Second quarter loss widened and lowered its outlook because of the outbreak in cyclosporesis. I think I'm pronouncing it correctly. Um, and then we had Wendy's withdrawing guidance, suspending its dividend. It's in the middle of its own turnaround. But at the same time, with outbreaks, there's a salmonella outbreak linked with jalapenos, and that is weighing on Chipotle. And with the difficulty in meals and restaurants and so forth, we spoke about McDonald's. Burger King, in addition to the difficulty of the K-shaped economy, and that McDonald's has to deal with. At the same time, Burger King has revamped its restructuring operationally. I don't know if you've seen an enormous amount of advertising by Burger King on its new Whopper, and we'll remake it for you if you don't like it, and we're going to make it your way, and so on. And so I guess all that ad spending is drawing some customers away from McDonald's back to Burger King, and that is weighing on McDonald's further. Burger King doing a little bit better. On the alcohol side of the equation, we have chronicled the difficulties in alcohol, wine, beer, spirits, and so forth. Uh, Diageo, which is one of the largest alcohol companies owning Johnny Walker, amongst others, they are looking at $1 billion of savings through a turnaround. They need it because revenue has fallen off a cliff. Molson Coors, the beer manufacturer, their sales have fallen amid challenges and higher supply costs because of aluminum and so forth. So they are also under a fair amount of pressure. I think I'm going to pause there. What else? Oh, just a couple of things. Sorry. Etsy is cutting 12% of its workforce. That is a difficult business, a really darling of the COVID era. Difficult to continue to hang on when there is less interest in buying knickknacks and craft goods. The CEO is focusing on its core marketplace. FanDuel's parent Flutter, um, sports betting is slowing. Because a lot of the volume is going to prediction markets, and B, I just think the sector has just a certain amount of penetration. You're not going to get the entire United States to be addicted gamblers. They've lowered their full year guidance, their profit guidance by 22%, and their CEO is stepping down at the end of the quarter. And one of the big losers from yesterday was Honeywell Aerospace. That's the company's first earnings report since spinning out of Honeywell Technologies in June. And supply constraints are just weighing on the company. The stock market overall yesterday came in with losses, generally on all the indices, but meager losses. Today, we are poised for a bit of a rebound, at least at the open, as far as futures are telling us. The only other notable thing is, I will say, gold has seen a nice bounce up to north of 43.50 at this point. All right, I'm going to pause there. Carlo, if you wouldn't mind, please give us the conclusion, at least as of the recess, to clarity and where we stand vis-a-vis Congress returning in September for chances of getting the Clarity Act passed, and some additional news relating to the crypto sector. Please.
Good morning, David. Good morning, everyone. Yes, unfortunately, I think two things have caused the Clarity Act to, as I describe it, get punted to September. One is a failure to reach consensus on this ethics debate, which I still maintain has largely been cover for the bigger motivation by the anti-crypto side of the Democrat Party, led largely by Elizabeth Warren, who put out a pretty self-serving video where she is trying to put blame on the failure of this thing to pass because it was basically written by the crypto lobby, and she can't get behind a bill that was written by the crypto lobby. And of course, she has really done nothing meaningful to advance crypto legislation in all the time that she's been in Congress, including when she had power to do so, because as many on this side of the argument believe, she is staunchly anti-crypto and will do anything in her power to chase this industry out of the country. So that was one factor, the ethics debate. The other was increasing pressure by the banks, which not only aligned the critical Democrats that needed to be rallied to get this done, but we also started to see breaks within the Republican Party. Josh Hawley had concerns that he was getting from local banks in his district and so forth. So you have a lot of pressure from the banks because of their stablecoin concerns that caused several senators to vacillate on their support on the Republican side as well. So now we're left with having to punt this to the return from the August break. It's still a very small window to get it done. It begs the question, David, can anything meaningful happen to change those votes between now and September? I don't see how, because the same pressure front will continue, and the same voices against passage of this will continue. So what does this mean? I just posted it in the Nest, but to summarize, the banks probably to an extent shot themselves in the foot by being so aggressive, because they leave open the Genius Act, which gives Coinbase the freedom to continue to pay rewards to Coinbase individuals who custody their USDC Circle stablecoins. So they didn't win anything there. And their best chance to do a backdoor amendment of the Genius Act would have been through the Clarity Act. But they're short-sighted, in my opinion, and they left a lot on the table to essentially, quote, die on this hill, so to speak, metaphorically. For self-custody people and TradFi people, they lost as well. TradFi had the opportunity to participate in the greatest revolution of tokenization of every single asset that's tradable. It's not going to stop. It's going to continue to happen. It's just going to happen offshore, and it's just going to happen in more creative ways through sandbox arrangements with the SEC and the CFTC. So nothing's going to stop, but what TradFi lost in this is the opportunity to be on the ground floor of it and have the legal cover to do it. Self-custody proponents lost the opportunity to codify some level of protection and defense of self-custody. So now we still remain in a world where self-custody is just given benign neglect and isn't a enforcement priority, but that can change with political wins. For developers like Roman Storm, who is facing a retrial, the notion that code is crime and the notion that developers of code in crypto can be responsible for what others do with their code would have received some better legal clarity, that those types of developers who don't have unilateral control over the assets would not have been deemed money transmitters, which is the critical definition for opening the door to federal criminal prosecution for those types of developers. That's now on hold. And of course, for the United States, we fall behind. Russia has signed meaningful crypto legislation ahead of the United States, which is embarrassing. And we now have only regulatory clarity through the CFTC and the SEC, which is subject to the change in political winds, because whatever guidance they deliver is only as good as the leadership that wrote it. And if that leadership changes or the priority for that agency changes, then of course those regulations change. So all in all, we've allowed this debate over the Clarity Act and the ethics provisions to cause the bill to get punted to September. And nothing gets accomplished on the ethics front because the very behavior that everyone was so concerned about just continues to go unpoliced. So, in closing, with respect to the Clarity Act, I think the Senate really needs to take a hard look over this recess and decide whether passing this bill is better for the country than no bill at all. And there will be consequences for those on both sides of the aisle that oppose this, because the crypto lobby is obviously very angry and is fully intending to respond to this when it comes to campaign season. Hasn't really done much to crypto. Everything still remains where it is. In fact, Bitcoin is up over 65,000. Ethereum is looking still like it wants to leg up. And all these things are going to happen with or without the Clarity Act. We do have an SEC that's willing to, and has actually been publicly stating that they're going to continue to provide guidance for building in this sector. So really, nothing has changed other than we don't have law on the books, which would have been the preferred way to do this for fear of what happens under the next administration that occupies the White House. But it is what it is, and at least for the next 30 days, we probably have nothing to talk about when it comes to the Clarity Act, David. Back to you.
Excellent, Carlo. First of all, on behalf of everybody, thank you for all the hard work. And I can say it will not be in vain. This is far from over. And when I say far from over, I don't necessarily mean clarity. Clarity may be over. There's a small window inside of September, but, uh, you know, it is a tough lift in that small window. That being said, the politics of this from the beginning have stunk. We've spoken about that a lot. And, if you read the worst part of this is, I think, is when the politicians know what the result is going to be at this point, and all of a sudden now you have Republicans saying that they're going to vote against it or they would vote against it, and you're just like, essentially you're backing into this. You're just trying to gain some points for whatever reason for reelection and things like that, to essentially sound a lot like whatever candidate your electorate wants to hear sounding like. And yes, this is campaign season, and we're headed into the midterms, and politicians, frankly, could care less, I think, about such I don't know, technical, I would say, issue like digital assets. I think that the to the voting base, digital most voters are not digital asset focused. I think most voters are definitely much more broader policy oriented folks, and it'll just be they'll be able to walk past this, focus on things that will help them get reelected or win. Um, and yes, seemingly this was a sell the rumor, buy the news event. We'll see if crypto continues to trade up even after the declaration that Clarity effectively is dead until September. But between what the president can do on an executive order basis, what the Treasury can do, what the SEC can do, I don't know if the Democrats are going to be particularly happy with what comes, as opposed to getting law on the books. I think it'll make it a lot messier. I think Trump will certainly be able to enrich himself a lot more without anything being around to stop him. Um, and so, I don't think Democrats will spin it that way. They'll simply say, look, we didn't put law in place, and Trump will do what Trump will do and point fingers at Trump. And that'll be their cop out on the whole matter. But we'll see where pricing goes from here. It is what it is. Like I said, I think this whole issue is very far from over because of the competitive landscape that you highlighted amongst nations. I don't think we can for very long, rest where we're at. I think we're either gonna by choice or by force get pushed into putting some rules and regulations around so that firms can proceed and keep up with the development around the world. All right, sorry for that long you know pile on. Good morning, Brandon. Um, Wanted to discuss with you, what you're hearing in the VC community, um, out of folks that were in SpaceX, that are still locked up in SpaceX stock, where they're thinking they're getting liquidity. We're now down roughly 50%, 50, from the highs. Verizon and T-Mobile shares fell after SpaceX announced plans to launch a mobile offering next year. Whether that's warranted or not, it will take time to play out. We have seen attacks on cellular companies in the past. This isn't the first. SpaceX shareholders are probably one thing. The business of SpaceX is probably another thing. And what does this mean for exits by other companies in the space? What does it mean for venture capital liquidity generally?
Yeah, good morning. So I touched on this a little bit the other day, and I actually had a call with yesterday with a VC that's heavily invested in SpaceX and was there from the very early days. And nobody's selling. I mean, as I pointed out, and I think we kind of saw this yesterday. There was a bunch of stories that the lockup period's ending and it's going to crash because everybody's trying to get liquidity. And as I mentioned, most of these folks are what I would consider post economics, meaning they do not need immediate liquidity, and B, the funds that are heavily invested in it from the early days are some of the greatest funds in the world that have already provided capital back to their investors, DPI, via other exits that they've had over time, and through those funds' vintages. And if you don't know how a vintage works in a venture capital fund, I get it. If you raised a fund in 2015, that's a 2015 vintage. You usually have a 10 plus 2 year period to start returning back capital to your investors. Sometimes that can be extended. If you're 2017, that means you're a 2017 vintage. Same thing, et cetera, et cetera. Many of these have already started doing so, and then others, such as the Sequoias and a few others, have become evergreen funds, meaning when a company exits or goes public, they do not have to immediately sell. They can stay or decide to stay in that stock as it's a public company. And at least from every conversation that I've had and everything that I've seen, they have no interest in selling. If they believe that this stock can go up, which is the belief among every early Elon investor, they're not going to sell at 113, 115, 110, whatever it may be. They're going to stay in. They are staying in. There was no big drop from the lockup yesterday. So I just, again, as I've stated on the show a few times now, they're not getting out of the stock. And they're excited. Not only was there the announcement of the cell phones, that's a big one, obviously, but going after the cell providers, but also there was an announcement, the big Terafab stuff. I still think that there's a lot of people that believe, because of the how Tesla and SpaceX AI are working together, that eventually those will become one entity. There's just very little reason to doubt that. I understand there's some short sellers out there that believe it. I hate short selling, always have. I'd rather bet on the positive outcome than try to bet on a negative outcome, especially when it comes to something as big as advancing humanity. It makes no sense. The other story, real quick, I'll touch on regarding AI. Yesterday, it was announced that OpenAI is making, and this is kind of going underreported, that OpenAI is making text chats unlimited through GPT 5.6 Luna, which is for their free and go users. So even free users get unlimited text chats. And I think that that's a really important piece. And I'm sure other labs will kind of follow suit here. As we've talked about before on the show, intelligence is being commoditized. There's no reason for them to charge that. And I think that a move like that gets this more into consumer hands. Consumer sentiment on AI has been kind of rough, uh, just because, several reasons. The data centers, they can, they equate that with AI. We've seen the stories of, AIs breaking out of sandboxes and anytime that happens, it's just some big negative story of they're going to hack my bank accounts, they're going to hack everything. And so, this is kind of putting AI into more consumer hands, which that's not going to be their big money maker. It's obviously always going to be enterprise. We've talked about that. But again, if you can help change sentiment, it's almost very similar to the crypto conversation. The public sentiment on crypto is fairly negative, I would say, and that's why these politicians have no desire or need to pass legislation such as the Clarity Act, because their voters, in large part, do not care about crypto, right? That's not going to get them elected, but their voters may care about AI. So I see this as trying to shift consumer sentiment on AI. And if there's a more positive sentiment on AI, politicians are going to be more willing to work with these AI companies, because that's what their constituents are going to want to see them do. I think crypto failed in that aspect. I think that they tried to throw a lot of money behind it initially because they had a ton of money to throw at it. But then as we're seeing these companies frankly start to lose some of that capital, they're going to have less money to throw at it, which also disincentivizes politicians to want to work with them. So, I see this shift from OpenAI providing that, even in a small way, just shifting consumer sentiment. And I think that that's going to be a pretty big story going forward.
Great. Folks, whoever sees the jobs numbers first, please just call them out. I know Dennis, who I'm bringing up, wants to speak about OpenAI and Apple. I just want to, from a non VC investor's point of view, mine, with regard to SpaceX, look, the stock right now, in terms of revenue, is made up of only Starlink internet service, satellite internet service, and AI compute rental agreements. That is not what SpaceX is going to be about. And so, if you're an investor, yes, to go back to Brandon's point, these early investors are holding. They're holding because the company hasn't done what it's supposed to do yet. I mean, it's quite far from that place at this point. So, again, I'm not an early stage investor. That's not my thing. But if you are, you certainly hold at least until there is revenue generation from the aspect of the business that you invested in, right? This company is supposed to be about space. And right now, I mean, a satellite company is nothing. I mean, we have those. They've boomed, they've busted, they've been bought by others. They've been bought for their spectrum rights and not necessarily for their satellites, right? And we know the biggest players in the space, are, some of the largest telecom companies. And then the AI compute, I mean, that's just a beneficiary of being in a very small circle of companies that always talk to one another and, frankly, being, having a power position to be able to get chips and data centers built earlier and faster than other people. And so immediately you have customers. But beyond that, the company has not done what it's supposed to do. So it doesn't surprise me if you say, Brandon, that the early stage folks are in no way, shape, or form selling. They don't even think about the share price. I'm assuming they'd be idiots to look at it on a daily basis because it's really irrelevant to them. I mean, if they just want to have a depressing weekend, I guess that's one reason to look at it. But otherwise, I don't think that that's particularly important. Dennis, I want to go to you, and then I'll go to Dave Nikoski's hand. Go ahead, Dennis. Good morning.
Hey, good morning. Thanks, David. Yeah, well, just kind of piggybacking off of that last topic, wanted to bring this story from TechCrunch to our attention. OpenAI's new AI smart speaker will reportedly sell for between $300 and $400. And as we know, OpenAI has been very coy and mysterious about this new hardware piece that they were going to release. We have more details now. Turns out it's going to be a donut shaped smart speaker that's screenless and has moving parts. So that's quite interesting. I'm wondering to the other speakers on the panel, because as we know, Apple is actively suing OpenAI specifically for hosting interview. Apparently there was a scandal OpenAI was hosting interviews specifically for ex-Apple engineers in the past couple of weeks / month. And these ex-Apple engineers were encouraged to bring privileged information to OpenAI, like unreleased Apple products, etc. One ex-Apple engineer even hacked into one of Apple's servers, by the way, as we know. And so anyways, amid the lawsuits from Apple to OpenAI, amid all that, I'm wondering, is this a good move for OpenAI, especially amid their expected IPO? First of all, OpenAI has lost the race to none other than Elon Musk, who went ahead and IPO'd SpaceX AI. So amongst Anthropic, OpenAI, and SpaceX AI, Elon won. Now who's going to win between Anthropic and OpenAI? Anyways, I just feel like my opinion is I think they're going to lose OpenAI. That is going to lose momentum if they flop this device, which it doesn't seem that like it's going to be a success to me, given how expensive it is, $300 to $400 per unit, as well as who's going to buy a smart speaker. Seriously, I was just looking on Grok some of the numbers. Apple HomePod, when it came out in 2017, 2018, Apple had to do a price cut, and then they completely discontinued it. And then they released their Apple HomePod Mini, and that peaked in revenue 2021, and then kind of fizzled out, underperformed compared to let's say the Echo Dot, which sells, by the way, for about $50. So I'm gonna leave it there. But just parting shot. I think this is a gamble that OpenAI should not do, given their expected IPO. Bad move.
Yeah. So real quick.
Wait, Brandon. Before I've met Dennis face to face. For people in the audience who don't know, Dennis is one of the Y Combinator alums that is on our show every day. His words are meant to be taken with a fair amount of gravity because he is one of these people. He is a visionary. He is a startup founder. So he has a fair amount of cred when it comes to his comments. I just want everybody to be aware of that. Go ahead, Brandon.
Yeah, just on the lawsuit front, OpenAI and Dennis, maybe I don't know if you've got a chance to read it. They did respond to the lawsuit, and they've actually now submitted for a removal of it or whatever because they said it was frivolous. And to some of the points you made, on surface it does sound really bad, but it actually came out that it was the opposite. And Apple's sitting with a little egg on their face. We talked about this, I don't know, the other day. I think David Tawwell had mentioned on it a little bit as well. That they had sent it to the wrong attorney, or to the wrong person at OpenAI, the actual lawsuit information. So they said that OpenAI never responded, and that it was false because OpenAI never got it. They sent it to somebody with a different Asian last name, which was embarrassing. And then there was actually text messages between somebody at Apple texting somebody at OpenAI trying to get information from them. So it was actually the reverse of the situation that Apple had outlined. And they had said that, you know, OpenAI responded saying it's frivolous, it's malicious, and it's basically clown work, is what they said. It's a great response by them, so you should read it because they come with a lot of facts. What'll happen with that lawsuit, I have no idea. I'm not an attorney, so I don't know. And then as far as the device, I think it's actually really smart for them to start leaking this and doing it, because if it comes out that this device is completely different from anything Apple's working on, which it sounds like, or has worked on, which it sounds like, then it kind of proves their point that, hey, we're not taking technology from Apple. It's just some Apple engineers decided to come work with us. And as we've seen, there's kind of a carousel that just goes on in this AI space because there's only so much talent. Again, I always compare it to NBA players, of LeBron James going to, you know, the Cleveland Cavaliers, then the Miami Heat, and then the Golden State or not the Golden State Warriors, then the LA Lakers, and then now the 76ers. That's kind of what happens. We just saw it happen with Google. Jeff Dean left Google after 27 years there, and is now going, you know, and starting his own thing. And then we see it happen with Mira Murati. We've seen it with leaving OpenAI and starting Thinking Machines. That's just kind of how this top talent, because they are very special people doing a very specialized thing. It's how it happens in AI. And so it's not weird in any way, shape, or form that Google engineers left, Apple engineers ended up leaving and going to OpenAI. They believed in their mission more, and some OpenAI engineers have left and gone to Anthropic, and vice versa. And it's just a carousel that happens with this type of talent. And so, you know, I do believe it. My personal opinion that the lawsuit's not going to work out or play out. As far as the IPO goes, you know, I've been pretty open about it. I think it's going to be delayed anyways. Same thing with Anthropic. And then the SpaceX, the reason they were able to win this or go first or whatever we want to call it, it's difficult for me to even think of them as an AI company, right? I just don't think that that's their main proposition. I think SpaceX is an amazing company, a space company, et cetera, with AI as a feature, not the main thing. And so thinking it's hard to group them directly with the Anthropics or the Open AIs of the world. I think those are the two frontier that are battling these open, you know, moonshots and other places of the world, but not directly with SpaceX AI, who I just put on a completely different level.
Super. While we were chatting, jobs numbers are out. Effectively, this boils down to bad news is good news. So the expectation for July was that we would add 83,000 jobs. And in fact, we lost 23,000 jobs. To explain that on an elementary basis, the thought is, well, if we're losing jobs, that means the unemployment rate is going to go higher, which means that there would be less incentive or no incentive for the Fed to raise rates. They actually would need to keep rates as is or cut them in order to stimulate the economy, because we do not want to get into a jobs problem where unemployment is rising, continues to rise, spikes, what have you. And so that is the read through right now. Whether the market will stick with that read through, we shall see during the day. But that was the big news out of the jobs report. First, Dave Nikoski, then over to Eric. Go ahead, Dave.
Yeah, I don't know if anyone saw that video of Elon talking about, launching rockets. There's a great video out there. I just thought it was quite funny. I saw it yesterday about, how they had to interact with the fish and wildlife, and what's the possibility of a rocket coming down in the ocean and killing a shark. So they need a fishing license, right? Then they went on to, they had to, the wildlife department also said that, launching rockets where their, launch site is could affect the seals. So they actually had to go abduct a seal, put headphones on it, and have it listen to boom sounds from the rocket, right? They had to do it twice. Absolutely hilarious video on regulations and just I mean, it was absolutely hysterical. So anyone that's got a chance, go look that up. So
Yeah, David Nikoski.
quite
So
funny.
if anybody ever asks why tech hates regulation, it's right there. You just nailed it. That is exactly why tech hates all this regulation BS that the government tries to do.
Yeah, and even internally, when they, wanted the statistics of what is the chance of hitting a shark or a whale, their own department said someone else inside, wildlife does that in the fish and game department to find what is the possibility of a rocket coming down and hitting a shark or a whale, right? And he said, "Well, why don't you talk to them?" And he goes, "No, we don't trust them. We don't believe their numbers." Like, it was absolutely hysterical. So if anyone needs a good laugh today, go listen to that video. You'll chuckle at it, to say the least. So, all right, back to you.
Awesome. Thank you for highlighting that, Dave. If anyone has a link to that, go ahead and post it. Eric, over to you.
Yeah, I saw that video last year. It was funny and shows how our governments nowadays have a lot of incompetence inside it, which is kind of scary in a AI age where they need to be on top of their game. Now, back to the jobs numbers. It's the first time that have this contrast where the United States is negative in terms of jobs number now, and Canada is actually positive. They say net change of employment is 75K positive for Canada, with an estimate of 20K, and unemployment rate going down. This in the midst of an escalating trade war. So we'll have to do some investigation to see, is this Cook number? Is there something behind it? Is Hormuz affecting it with indirectly or not? We'll get back to you later on that. But I just wanted to underline the contrast with the US, and the US having negative farm payroll will probably, we had a lot of calls for hiking rates. That might put a bit of the brakes on that. So maybe the rates will stay stable for a while because of that. They can't hike, they can't lower the rates, like they're kind of stuck. We'll see. Back to you.
Awesome. Thank you, Eric. In other company specific news, Bed Bath and Beyond is changing its corporate name once again to Neighborhood Intelligence. I know that sounds insane. I don't get it either. I wish Justin, but we have to do this again on Monday when Justin's back. Rebranding is his forte. This one doesn't make sense to me. I respect Marcus Lemonis. I think he's a good guy. Bed Bath and Beyond stock has been stuck for a really long time in the middle of nowhere. They've added all sorts of other business lines to their business. Um, they've folded in Kirkland's. They've done a deal with the Container Store. They own Overstock. It's endless confusion, at least from my point of view. Again, I'm not neck deep in the story. I haven't been involved since the bankruptcy, but in any event, neighborhood intelligence. There you go. Next is on the consumer side, Capri Holdings, which is the owner of Michael Kors and Jimmy Choo. And if you remember, this is the breakup or one of the pieces of what was going to be a merger under Lena Khan that she broke up between Coach, which is called Tapestry, and Capri, which owns Michael Kors. In any event, they have had a difficult quarter. Luxury seemingly is now, I wouldn't say equally suffering, but suffering alongside the bottom end of the K. Along with the bottom end of the K and non luxury or discount, I have to mention EasyJet, although it was bid by Castle, I think it was Castle Lake, bid on it to take it private. Apollo came in, outbid Castle Lake, and Apollo is now the new owner of EasyJet, the largest discount airline across Europe, if I'm not mistaken. At the same time, JetBlue came out with earnings, and they are in a world of pain. If we see JetBlue go bankrupt, I wouldn't be particularly surprised. They might need a restructuring, especially if the price of jet fuel continues to remain somewhat elevated at times due to everything going on in Iran and so forth. And at the same time, it is just not a good environment for, I'd say, the lower end of the economy or more budget focused passengers flying for leisure. And at that point, Lena Khan will have done a two for two on killing both Spirit Airlines and JetBlue, and making sure that the merger that she disallowed went ahead and pushed two companies into bankruptcy on both sides of that. But we'll watch and wait on that. In addition, bucking all of this on the K-shaped economy is Elf Beauty. Elf Beauty, discounted makeup manufacturer, 30th consecutive quarter of net sales growth. That's outstanding. They did buy a company in 2025, which is helping them. They bought Haley Bieber's brand, but nevertheless, net sales continue to climb for them. Really, really strong results out of them, and the management has done really well. The only other thing I'd mention is DoorDash, 36% higher revenue for the quarter on a year over year basis. And that was boosted by its acquisition of Deliveroo, which is a European delivery service. And so the gig economy seems to generally be okay, and continuing to chug along. Dave Nikoski, your hand.
Yeah. So after that jobs number, the dollar's down 53 cents on the US dollar index. Again, I look at a lot of, individual currency crosses because that's where you find the things that people aren't looking at, that, just pay attention to the US dollar index that was made in, 1971 or 72 has not changed, right? The 10-year yields in China, 1.7%. China's currency is a lot stronger than the dollar and has been for 2 years. Dollars dropping on this jobs number. Gold is absolutely ripping. I'm in the commodities area. I tried to mention gold the other day when I was hosting the show, but no one could hear me. So, I have buys out in the gold space, the silver space, and platinum, palladium. Picking up, back into the aluminum names. Century reported yesterday. I mean, they came in light on revenues. The stock's trading at less than 5 times earnings. Same with Alcoa. Aluminum pulled back dramatically with some, legislation or executive order by Trump on the aluminum side. But I see breakouts, and it's not just in the commodity structure. They're going to run the economy hot. But I think today I'll be highlighting the most names I have in 2 years from a very, very broad perspective in terms of sector and group. It is stock picking, but the list is absolutely enormous. And I've been saying that for 2 to 3 months, that everything underneath is coming out. If you look at the Owl ETF, or the Owl, which I had been bearish on, I highlighted it as a bottom fishing candidate a couple months ago. That just had a huge candle up day. I don't see anything in the high yield area that's presenting itself negatively. There's a Blue Owl Technology Fund, OCSL, I believe it is. That actually is printing a bottom. So I just want to point out that, there's so many names that are hitting, 13, 26 week highs. A majority of them are outside of tech. It's stock picking. It's not a group move. You're seeing, candles print on, things like AVNT, which is a polymer manufacturer that, no one, no one in X is talking about, the broadness of this market. In terms of, everyone wants to play text, play ODTE, play calls. I'm just gonna say once again, the number of names that are breaking out X Tech are absolutely amazing. So something I haven't seen. So, again, the market is broadening out, and, you know, keep your hat on and look for those names. So back
Dave,
to you.
Dave, you can't mention metals and not talk about tungsten, my friend.
Well, I was all over tungsten, last year, the hottest metal, period, by far. I know Dwayne's not in here, but there, if you look at some of the names that used tungsten, Acme United ACU had a big breakout, Cadent KAI. These are, machine oriented companies that produce cutting tools and that type of thing. Tungsten is used in so many products, anything from semiconductor chips to space, aircraft, products. So it just, again, I think it's going to come back. I mentioned one name. I think Paul Mangione, I think was the one that commented it on last night. I'm looking back at ALM. I think they've sold out 2 years of tungsten, and they just started mining in South Korea, which is an ally of ours. I think they have some other mines opening up as well, but there's very few pure play tungsten plays. They're all very small, but you need tungsten, for any cutting fabrication tool. Again, aerospace is rockets. You need, you name it. It is a vital product. So I'm not in ALM, but I'm looking at it for a reversal. It pulled right back to a support that I like on relative strength. But I haven't gotten a downtrend reversal yet. So something I'd be looking at. Again, it's small cap, be careful. Don't want to, not investment advice, do your own homework. How about that? Back to you.
Always do your own homework. Join us. We're homework helpers, but do your own homework. 30-year below 5.2. And futures green across the board. Nasdaq over 1%. S&P up a half. Dow up a third. On us. Good morning. Energy for the end of the week, my friend.
Good morning, everyone. A lot of news today, not only because it's the end of the week, just because there are too many things going on around the world right now. The Let me start with oil prices. They are down by about 1%. They were up by 2%. So the volatility is very high. And the reason why volatility is very high because of the too many factors that are affecting the oil market today, whether you talk about politics, you talk about wars, you talk about diplomacy, all the other factors that are not related to the market itself. However, we do have a problem with information. I mentioned before the speed of information, but the issue here is sometimes the problem is lack of information. So part of that lack of information is that the Saudis decided to turn off the AIS signals on all their tankers and ships in the Red Sea. So we have no information. And one of the problems we have today is Bloomberg published a report. Now think about this, because this has been going on for a very long time, and I'm going to tell you a story about it too. Bloomberg published a report saying tankers entering the Red Sea to load Saudi oil are signaling the Suez Canal as a destination. So imagine whom they are benefiting from this report and what is the value of this report. They are literally telling the Houthis, look, either block them or hit them. Since the start of this war, we've seen CNN, CNBC, Bloomberg, and others basically having experts, military experts, talking, and the Iranians are watching, and the second they are acting on the advice of American generals, retired generals. We've seen this during the Iraq war too. Even the Iraqis admitted that we made decisions based on what the generals are saying on CNN. So when Bloomberg publishes something like this today on tankers entering the Red Sea, signaling Suez Canal, but they are going to load Saudi oil, who benefits from this? And what they are telling the Houthis. Anyway, the Hormuz traffic is down substantially since in recent days. We have only 8 ships passed since yesterday, but Bab el Mandeb activities basically went up. And in terms of number of ships, we are near normal, but in terms of oil, basically is down. The We have the announcements of this defense agreement between Saudi Arabia, Turkey, and Pakistan. And as I wrote in a tweet, symbolism at its finest, choosing the holy city of Mecca on Friday, which is the holiday for Muslims, to sign the agreement. All the three have relatively high populations, high Muslim populations, and that are mostly Sunnis. All they have borders with Iran. The Saudi borders, of course, are maritime borders, but all of them are borders with Iran. And everyone agree that this is a coalition against Iran or a Sunni coalition against the Shia or whatever you want to call it. But all of them have Shia populations anyway. So especially Saudi Arabia and Pakistan. And the most important part of this agreement is any armed attack against any of them is regarded as an attack on all of them. And it is very clear that this is going to be tested very soon. And just hours before the announcement, the head of the largest militia in Iraq asked his followers to stop attacking Saudi Arabia. That means they are taking this seriously and they don't want to be attacked by the coalition of those guys if the militias launch any rockets or drones on Saudi oil targets. And before anyone jumps to conclusion and say this is against the US or against Israel, etc., this fits with the US objective. This is basically with the blessing of the Trump administration because it literally means sharing the defense burden in the Gulf, is sharing the defense against Iran or any other groups there. So it fits with the US objective basically of lowering the cost of defense in the region. For those who are interested in investments out of this, watch Turkey's sales of drones and weapons, etc., whatever Turkey manufactures in terms of weapons, basically, because they would increase sales to those two countries. Senator Ted Cruz calls for Trump to arm Iranian protesters. And I'm quoting his statements right here. Our objective should be regime collapse. If you talk to most Iranians, that's exactly what they don't want. Arming protesters, basically, you are just calling for them to be killed. We've seen it in other countries. We've seen it in Iran. This is the most stupid statement an American senator can say. It would have been acceptable if he said regime change, but collapse? We already discussed this on the show a long time ago. No American will benefit from regime collapse in Iran. It is not in the interest of Iranians for regime collapse, nor it is in the interest of any country in the region, including Israel, for regime collapse. It means civil war. It means an influx of tens of millions of refugees. And if you think Iranians are going to end up in Afghanistan or Pakistan or Iraq, you are wrong. They will go to Western Europe through Turkey. And you are talking about tens of millions going to Europe. There will be an increase in terror attacks on Americans, American targets, U.S. allies. If you look at Pakistan, basically they have issues with minorities that are split between Iran and Pakistan. They call them the Baluch. Turkey will have problems with the Kurds. So the statement by Ted Cruz is just crazy. The objective must be to get rid of the bad guys who act like drug cartels and negotiate with those who want a brighter future for Iran. But a regime collapse is not in the interest of anyone. If you look at what the US did historically in Afghanistan, Syria, and Venezuela, They did exactly the opposite of what Ted Cruz is saying, and they've been very successful. They handed Afghanistan to the Taliban to keep Afghanistan together and prevent a civil war and a major refugee crisis. They handed Syria to Ahmed al-Shara because he has the power on the ground and prevented another refugee crisis and other problems. In Venezuela, they cooperated with the army again to prevent the same thing. So why Ted Cruz is going the other way? And you have those successful stories there. Anyway, India's reliance, this is the largest refiner, booked a super tanker to carry Iraqi oil at record freight price, about $25 million just for one ship. $25 million is record high. But what the news does not tell you is they got $40 discount on crude from the Iraqi government. So if the price of crude is 80, they bought it at 40. What is the cost of shipping this oil to India, which is a very short distance, by the way? It's about $12. So they gained a lot. They bought it at a $40 discount. They paid $12 for shipping, and they pocketed the difference. The only problem now is how to get it out of Hormuz, and whether they are going to pay others, like the cronies of Iran, someone in the IRGC, etc., literally bribe others to get this tanker out. But the issue here is when you have a $40 discount and a cost of $12, although it's the highest in the world, still very attractive if you can pass that through the Hormuz Strait. We just to since the media did not cover this $40 discount, we have created the daily publication just to debunk, clarify, explain, and put this news in the right context and perspective. It focuses on all energy sources and global energy markets simply because the media, every time the media basically make a big mistake, we benefited from it, and that's unfortunate. But someone got to clarify those stories to investors and traders and others. Here is another lesson that people should learn. Yes, we have the European Union and we have those countries within the European Union. Yes, the US cares about its allies. Yes, Britain cooperates with Europe, and when it comes to Europe versus others, Britain will stand by Europe. But when push comes to shove, every country for itself. That is the biggest lesson we can learn. So Britain is curbing power exports, that electricity exports to Europe, for fear that they might have shortages and problems. And if things are going to get worse in the next few days in Europe because of the heat wave and lack of resources, we are going to see every country basically on its own and acting on their own. We'll see the leadership of the EU going crazy because they want to share resources, but countries will not share resources. And they will play various games so they won't share those resources. Another lesson. We've seen the climate change pundits basically for years and years fighting coal. We don't want coal, etc. But coal is still king no matter what. And the news today, China, which is the largest buyer of coal, imported 23% more in July relative to last year. Not only because they have problems with some of their mines, but again, because China is trying to literally secure energy supplies, because whatever we've seen in Bab el-Mandeb and Hormuz Strait may not be the big event that China is preparing for. China has 1.4 million barrels in oil storage. During those recent events, which they are historic on their own, they used only 50 million. And the question is, well, what is going on? What does China know that we don't know? I'm going to repeat this statement probably 100 times in the next few months. It seems they are preparing for something else. We thought it's Hormuz, then it's Bab el-Mandeb, and now there is something about China. Something is going to happen. We don't know what it is. Historically, from 2019, we know they were preparing for Malacca Strait closure. Will this happen or something else? We don't know. But there is something that does not make sense about China's behavior given all the historic events that we went through. Looking at next week, the hope is that the Trump administration will end up with some sort of a deal because Iran is negotiating a deal with Oman. And whatever negotiations between Iran and Oman, it means nothing to the other Gulf countries and to the rest of the world. And people must understand that whatever the Trump administration is going to allow Iran to do, the Trump administration does not represent the world. So, for example, if the Trump administration allows Iran to collect fees, they are not the UN, they are not the world, and they are not representative of the world. So, whatever agreement they have basically does not stand internationally. And this is part of the problem we are having. So, one of the issues that we got to pay attention to is it seems that whatever we've seen since the official end of the war, in March and April, the big war, whatever you want to call it, because people define war differently. But we have the major war in March and April, which has not been repeated yet. So we have those back and forth, etc. These things. It seems this is what we are going to live with, at least until the elections. And whatever comes after that, we don't know. But one issue that people must understand, especially those who are still wondering why oil prices are low despite all those problems. Well, oil prices are low because we have this major decline in demand. End of story. Don't be fooled by the living standards you are in where you are. The level of damage around the world is beyond imagination. This is, I will end with the statement, this is literally the largest event in our lifetime. Back to you.
Super, Anas. Dave Nikoski, you, and then over to Eric.
Hey, honest, I don't remember the how much coal China produces and how much they import. I'm not seeing a lot of activity in the U.S. coal stocks. I am seeing it in the met coal space, though, that many of the stocks are near breakouts or major reversals. Do you have that data so I don't have to look it up? Because that would be helpful to listeners in the room if you have any
I will
insight.
email you the data and I will update the charts. The issue here is not really the numbers as much as compare things to expectations or forecasts, because this is really what's affecting the market. The market basically was looking at coal to go down worldwide, et cetera, et cetera, et cetera. And now we figured out because of AI, because of data centers, and because of the national security issues, that reality is exactly the opposite of all expectations related to coal. So that's where the comparison should be, where you compare it to expectations and you'll find out how people can make money. We've been bullish on coal. I mean, you guys heard me on this show. We've been bullish on coal for almost a year now. Back to you.
Eric, over to you.
Thank you very much. Thank you, Anas, for all this talk today. And I just want to add something about China. They were not necessarily over the last 5 years or 7, 8 years getting ready only for Hormuz or only for the trade war. They were getting ready for all the wars, meaning trade war, economic war, physical war, energy wars, trade routes war, because this is all economic war. And they know that they will have a rivalry. They have a rivalry with the United States, whether they like it or not. There's different political currents there. And once they start having this war, when the United States, let's say, cancels chips, China reacts, cancels some rare earths, back and forth. Once the war starts, you can't predict exactly where it's going, but you know you're going. It's escalating, right? And at every move, you got to be able to be ready for what may comes next. What may comes next, and you got to be able to defend for the long term because it's not going to be a 1 year war, 2 years war. This is going to be decades. This is going to be decades, and other countries may shift back and forth according to their needs, according to who they might find more trustable. For the longest time since 1945, the US was the one really leading the world economically, the architecture of the financial system, and pretty much leading the world in which direction it wanted to go. This is now being challenged and it'll be rocky for at least 10 or 20 years, at least, Anna. So, of course, since China is the main geopolitical rival to the United States, they will be ready for just about any way the US can get back at them. And then the other secondary countries, because as the world gets back and forth, one pole will try to seduce some people. We saw the mistakes that Donald Trump did because the war machine is one thing and Trump is slightly different. Meaning Trump is, his mood goes left and right. While the war machine is doing in its geopolitical architecture around the world and is progressing step by step, Trump is there alienating his own allies. Yeah, so he's weakening his position diplomatically, weakening his position in a different way. So there's a lot of unpredictable things that happen during a war. It's easy to see a war coming, but it's very difficult to see every single step and where it will end. I often use the example of who in 1939 would know that the Second World War would end in 1945 with an atomic bomb? Not a single soul. Yeah, so they have to try, and every country has to try and plan for what they can plan. And just like you said, very often when things collapse, becomes every country for themselves. So they have to try and plan for the maximum that they can hoard. And that's one rare thing that Canada actually has an advantage over some European countries. Canada does have a lot of energy resources and natural resources that may come to save the day at some point in the future. Back to you guys.
Thank you, Eric. Paul, good morning.
Hello, sorry about
No
that.
worries.
Uh, yeah, the actually, while we're just talking about the energy markets, I wanted to ask Anas, does he? I think did he mention maybe a few days ago about potential restrictions on exports? I think he might have been bringing it up in like specifically diesel. Does he see like diesel restrictions in regards to exports, especially as we get to the winter months. That and I bring this up given the I was looking at the strategic uh, the strategic reserve. It seems like it's extremely low now, and that's something that I don't know if there's a specific diesel strategic reserve, but is that something? I know he was talking about people would only hit the strategic reserve if it's profitable for them, but does the level of the strategic reserve allow or require then exports to be turned off in terms of, let's say, specifically diesel, I guess, because refined products. Is that something that like he expects to happen soon? And then if so, how would we see that
Yes,
coming? Would just be like
I'll
an
be
order that
happy
comes from
to
the government?
email you what we've written about diesel in particular. If you contact me, and I will be happy to send it to you. The
Awesome.
issue here is the following. First of all, the president of the United States basically have the legal authority to ban the export of anything, including crude and petroleum products. And we had a presidential order basically to ban it since 1974 until December 2015, until Obama basically removed that order. So Trump has the power to do that. But here is the issue. When it comes to diesel in particular, the crisis in the world in the oil market today is not in crude. The crisis we have is in petroleum products. And refineries are running at maximum. So we cannot solve this problem since they are running at maximum. The refineries that can bring in this amount is already locked in the Gulf, and they cannot export. but they can add massive amounts and solve this problem. So we have this issue that we have shortages, but refineries are running at maximum, and we cannot solve this problem. Product prices in the United States, despite the fact they increased, they are still lower than the rest of the world, and therefore they create an arbitrage, and traders and refineries basically export these materials to the rest of the world. Trump made a mistake by focusing on companies' profit, and he asked the DOJ basically to investigate manipulation by the companies. We've been hearing this for over 50 years in the United States, and every time the Congress done investigation, basically they ended up with nothing. So that was a mistake on the Trump part to talk about profit and manipulation. The president basically should say something along those lines, that Americans are struggling because they are paying a lot of money for diesel and gasoline, etc., and companies should reduce their exports. If they don't reduce their exports, I am going to impose a ban on exports. So he can threaten the companies with a ban. And why this is important? Because he had the authority to do it. He can do it. But the other things, he cannot influence profit, for example. He cannot influence that at all. He cannot force the companies to lower prices, but he can block exports. So he should focus on what he can, so his threat can be credible. And then companies will say, "Well, probably I should reduce my exports so I won't get in trouble, or they won't ban exports and I lose everything." So that's really part of the issue. Regarding the SPR, people must understand the following, that there is a lot of hype about the SPR. And part of that hype, let's remember that there was a time during the Republican Revolution that was led by Newt Gingrich, for those who are young enough to remember that. They wanted to literally abolish the Department of Energy and literally sell everything in the strategic petroleum reserves. That the Republicans wanted to get rid of it. In 2017, Trump himself, and you can check that, Google it and see it, Trump himself wanted to sell half of it. And guess where we are today? We are at half of it. So he got his wish from 2017 anyway. Regardless, we still have significant amount of oil in the SPR. There is a debate on what is the minimum. People confuse the legal minimum with the technical minimum. The legal minimum, this is a mandate by the Congress. You cannot go below 252 million barrels. We are still about 70 million away from it. But within that mandate, it says that the president, in case of emergency, can go below 252. But the question now is, what is the technical minimum? What is the minimum operational level that you need to leave at the bottom? And that is debatable, and we don't know what it is. It's all guesses. Even the Department of Energy mentions something like along 70 million. So we are still way away from it. And I think that's still a guess. We don't know. But
You're saying technical from an operational standpoint,
from
like
from
this,
operational point of view,
this.
the Department of Energy is saying that we should keep 70 million at the bottom. Others are confusing it with the legal, because if you see a tweet, people saying 250, they really mean the legal one, not the
Right.
operational one. But the issue about the SPR, related to your question about diesel, and you will find that in the report that I'm going to send you, that we cannot make diesel from shale oil. I mean, we can make it, but it's not economic. The shale oil is light sweet. We can produce a lot of naphtha and gasoline. To produce diesel, we need the medium and heavy. So the largest amount that's been released from the SPR that enabled the United States to export diesel to Europe, because in July, U.S. exports of diesel were the highest on record. simply because of the medium sour crude that was released from the SPR. And the question now is, okay, once we stop releasing medium sour crude from the SPR, what's going to happen to the diesel market? That's where
Yeah,
the problem
yeah.
is. And if you look
And
at
what does that
Hormuz
mean for
Strait,
Europe if you turn off that?
correct. And if you look at Hormuz Strait and Bab el-Mandeb, what we lost the most is medium sour crude. So diesel basically, I mean, it might go crazy worldwide simply because we have problems with the medium sour crude. We don't have enough diesel. And guess what? The backbone of any economy in the world are the truckers, and the trucks run on
The
diesel.
diesel. Yeah.
Back to you.
All right, I'm gonna
Awesome.
close up with the following. We need to discuss this a little bit more next week. So the intervention that happened in the yen by the United States, along with uh, Japan's BOJ, was not funded by U.S. dollars. It was funded by the United States selling euros. And in break with long held tradition with respect to intervention, currency intervention, we did not call, Scott Bessent did not call Christine Lagarde first to let her know. It only became evident to the ECB after it had already been done that this is what we did. So this did not come at the expense of US dollars. It came at the expense of the euro, the intervention that we went ahead and pulled off with Japan. Query generally whether that intervention is going to help longer term. And then B, what does that mean? The way that this was carried out, what does that mean for the US's, excuse me, regard for the Europeans' opinion on anything? We'll pick up with all that next week. I am wishing you all a delightful weekend. Hopefully, a beautiful summer weekend wherever you may be. Hopefully, not that hot, not that humid. We'll see you back here 8 a.m. on Monday morning. Thank you so much, folks. Have a great weekend. Take care.